analysts. Welcome to Paisa Vaisa. I'm your host Anupam B50 on Twitter, and my guest today is India's first signal-based trading app, Investmint. I'm talking with Aakash and Sandeep Rao, and they've come all the way from Bangalore. We got to really appreciate that love that they have for the podcast. They're going to talk about the problems in trading and how Investmint solved it, and much more right after this short break. And welcome back. Aakash, Sandeep, welcome to Paisa Vaisa. Guys, thank you for coming down all the way from Bangalore and getting stuck in our traffic jams for a change, for coming over for Paisa Vaisa. Thank you, guys.
No, thank you so much, Anupam, for having us. I've been a big fan of yours on Twitter for a long time now, and have, of course, been following you on Paisa Vaisa for a long time as well.
Don't hold that against me, please.
So,
My tweets are not...
no, absolutely a pleasure to be on this podcast. And quick introduction, I am a tech guy, being part of several startups over the last 10 odd years now. I'm a stock market investor, trader, have done bunch of stuff through my life with respect to just side hacking and doing stuff, right, all the while. Sandeep can...
Well, I've been into creating, trading and investing products for the past decade. Prior to that, I've worn many hats, from being in sales, human resources, to being a prof at one point of time. But maybe that's for another day.
Yeah, घूम फिरा के सब लोग market में आ जाए. So give me a background, guys. What were you guys thinking before you started or thought of the idea of investment? Let's just get a background of why you're doing this, and then, link to that is the use case for investment.
No, absolutely. I would love to go back in time when I started managing my own money. And that started with me basically watching live television, business news, and grabbing my inputs from them. And one thing led to the other. I started pulling people up on WhatsApp groups, 10 people all getting their own advisory from their own sources. And one fine day you're holding like 50 stocks in your portfolio. You don't have any idea why did you buy it in the first place? Until when are you supposed to hold them? What's the plan of action, right? You're completely clueless. And, then you essentially start dabbling in more risky assets like futures and options and whatnot. All of a sudden you are playing with like 3,000 quantity lot sizes and one tick reduction and you lose $3,000 all of a sudden, right? So you go through a journey, and then you realize that a lot of people are going through that journey of being just unsuccessful traders in the market, right? And that goes back to the point where a lot of people just believe that trading is not their cup of tea. You will just end up losing money. And then, you end up discovering places like Capital Mind. Deepak Shenoy, who had started Capital Mind 6 to 7 years back now, right? I've been a member since then. And you notice something very peculiar and interesting about these folks, right? They don't do what I was doing, right, with my money. They follow a very set structured process, which is data backed, which is insightful, which is scientific in nature, some process behind their investing and reasoning, right? Saw the two sides of the story, right? And found myself sitting somewhere nearer to the Capital Mind community than what I was doing earlier, and ended up, building something on the side called SignalX, which was one of the algo trading DIY tools. One thing led to the other, and we are running Investmint right now.
Yeah. Sandeep, what's your story?
Well, I was lucky to see both sides of the story. I was at Capital Mind, and then now I joined Aakash. So what to echo what Aakash said, there were these people, be it fund managers at Capital Mind or savvy investors and traders who were part of the Capital Mind community. There were few things which I thought were very different about them compared to, a typical retail investor. They were all following multiple, investing and trading strategies. They had figured out the allocation bit right, so they knew kisme kitna lagana hai, all of that. And they were seldom levered. One of the things which happens with derivatives and these complex products is you end up taking a position which is worth much more than what you're paying for. So all sorts of things happen when you do that. And lastly, there's a very human element which I saw about them, because I saw these people through the lows of 2020 all the way to this crazy 2022. And they are still following the same set of rules without getting bothered by what's happening in the market or trying to predict the market. That's something which kind of stuck to me, that there are these people who have figured it out. So that's something which I observed on both sides.
Statistics, yeah. Guys, help me out here, because Nitin Kamath keeps on tweeting a lot about this. He's pretty clear.
Pretty vocal about it, yeah.
Pretty vocal about it,
yeah.
You're right.
And he has the data.
Of course. He would have the data.
Of course.
He was on our podcast like many, many years ago. Let's walk through that. He says that pretty much all traders lose money.
Yeah.
And I'm not sure what is wrong, why. Let's
Absolutely.
go into that.
Absolutely. No, so I'll piggyback on the same comment I made like a couple of minutes back, which basically says people are unstructured in their investing behaviors. They tend to over allocate on stocks they probably have heard of and know really well of, and tend under allocate on things that probably they have never heard of. So in my example, for example, I was holding stocks worth 5,000 rupees and they ended up being multi-baggers, while I was probably investing a lakh rupees in scripts that gave me probably a 20% loss, 30% loss. Net, I was losing money. So yes, I was that trader, who was losing that money. So what we learned at Capital Mind and otherwise in various other places, right, where we worked closely with traders or were associated in some capacity with them, is that they all followed a set process to investing. And that's what helped them belong to that other 5% of successful traders who are actually making money. So I think it all boils down to what is your investing persona, right? How emotionless can you be with the outcome without really getting controlled by greed and fear? What dominates our mindsets? Can we really think long term about a process and sticking to that process and making it work, let it work for you in your favor instead of really getting bothered about short term outcomes? So I think that's what differentiates successful and the unsuccessful traders. There is too little for an unsuccessful trader by their side to be able to turn into a successful trader, is how I look at this space.
Sandeep, you ran the very popular CM chase, what was called Capital Mind chase. So, I want your views on what Aakash said, what Nitin says, and with the background, because you've developed these strategies.
Correct.
For, and of course, shout out to Deepak Shinoy.
Absolutely.
And Vashishta guys out there, if you're listening, we are all fans of you sitting out here.
Absolutely.
Go on, Sandeep.
So, the thing was, I spent a short, part of my career in academia, and that is where my interest in quants came in. And when you look at assets from the lens of data, you find out there are trends, there are certain assets which trend more, there are certain assets which don't trend, and so on. So there are patterns which you can kind of figure out through data. So that is where the whole quant and statistics and these ideas come in. And, you can create models if you have the data, and you can figure out when to get into these and when to get out of these assets and so on. So following a quantitative approach, I think, gets you on or increases the odds of you being successful. Let's put it that way. So Nitin is absolutely right in terms of saying that majority lose money. But the point is the needle is moving to the other side. So if you also look at it, I see a lot of people today, especially younger generation, people who must be in their 30s and 20s, they're far more savvy than the older generation. Okay. And I'm referring to people like you and me. Okay.
So I'm twice that age, but go on. Yeah.
So they are looking for tools. They are spending more time on the internet. And even if you look at the mutual fund ecosystem, okay, the number of quant funds which are, getting launched in the past couple of years have been high. So I'm assuming the awareness about quant, awareness about systematic investment on an average is increasing, and that's for good. So there are more people who are there to, participate in these strategies. That's how I look at it.
Yeah. So before going into the next question, I have this thing, because we spoke about derivatives, and I think Warren Buffett famously called them weapons of mass destruction at some point of time. But derivatives, guys, how well do you think they're understood in India? I'm sure that there's a massive community that understands them perfectly well.
Yeah.
Okay, and there is what Sandeep just said about a whole batch of new people who are coming in, new generation who are coming, who are trying to understand this.
Right.
Obviously derivatives, I'm personally a very big fan, because that's what gives you price discovery, that's what gives you liquidity, and that's what markets are about.
Correct.
What do you guys think? Because derivatives play a very major role in trading.
Absolutely. If you look at it from a lens of what probably a hedge fund would do or a more sophisticated investor would do, they wouldn't spend or invest crores of rupees in markets and not bother about it, right? When you have so much at stake. And that's where the instruments of derivatives come in, right? They help you control your exposure in markets by being systematically exposed. Let's put it that way, right? And I think it's a weapon to be used in the right fashion. It's not a weapon of mass destruction, in my opinion. But for example, at Investmint itself, we have models that will enable you to hedge your portfolio on the downside, right? Add alpha on the upside. Now, these might seem complicated constructs or concepts to a retail investor, right? They have never probably dabbled in futures at all. And therefore, we don't recommend, or nobody should recommend, just plainly buying into a lot of Nifty futures for the heck of it, because it's like levered 5x, 6x, right? So it just boils down to, are you already invested in markets by that much amount? And therefore, are you using futures in the right way or options the right way? Or are you just like really exposing yourself on both the sides so that your gains are magnified and losses are super magnified, right? So I think played the right way, it could be a weapon of, a very useful product.
Yeah.
And Sandeep can add his
Well, Sandeep, actually, you know what? Let me flip this question in a certain way to you.
Sure.
You would have a lot of friends, family, whatever. I'm just assuming. I get that very often. Where do I start learning? So where does one send these people in terms of learning? Okay, because and what I'm also getting on to is the slightly dark-ish side, which is people on YouTube,
Correct.
make 10%, double your money, triple your money, that kind of rubbish that's out there. And I'm calling it rubbish because it is rubbish.
Indeed.
Anybody who's been in the markets would tell you that.
Indeed.
There are no free lunches and it is definitely not easy.
True.
What would be your answer to someone who says that I want to learn about derivatives, I want to learn about stock trading? Tell me more. And don't go to the easy way and tell me zero the varsity because that, I mean, everybody goes there.
Got it.
What would be your answer?
So, of course, you said varsity is a place where you get some sense of it. But beyond that, what has helped me personally is participating in a very, very, low risk manner. And which is tough with derivatives because, the idea of leverage is such that you are paying, 100 rupees, but you're taking a position worth 500 rupees. So understanding that concept takes time. But I think one way, if you are young and if you're getting started, is to start very small without an intention of making any money. The whole idea of participating is to learn. So that's one. And other than that, even at Investmint, one of the things which I personally want to do is to bring out these models and, enable something like a virtual trading environment and so on, which is there in many derivative, platforms today, where people can at least observe and figure out, okay, if I had taken this position, what would have been the outcome? So that's the best way to learn. Till you do it, you don't learn it.
I think that's one bet we are taking at Investmint, where we are saying you have been taught to learn and then participate in markets, while we want to encourage participate and learn on the go. So more of an experiential learning that happens every single day. So, you participate in systematic strategies and concepts without even having a demat account, probably, right? And that could be a learning lever that you have never really pulled.
Yeah. Have you guys blown up by any time? Because in my early CA days, I had blown up. Blown up means, obviously, folks, for those who don't know, it's like losing essentially everything that you have in the stock markets, and then, I don't know, maybe going to your parents, begging for money or sitting on the road, I don't know what. But it teaches you a lot of lessons. And if you speak to any successful investor trader, he'd have at least a few stories of how either he completely blew up or came, dangerously close. And it's only the guys who come back, okay, and don't run away. The guys who actually stay.
True.
So has that happened? What did that teach you? Or anything close to that?
Well, let me take this one because, there was this phase in my life where I thought I figured it out. Okay. I'm sure all traders go through that phase. And that is where, but I was a little smart, I would say, because I would divide my money. If I have 5 lakhs with me, that I would decide, okay, 1 lakh I'll blow. So I think I have blown up many a times. If that's the measure, I think I have done that many a times. But then you come out with a learning that,
and you came back.
And I came back and I realized what works and what does not work. And that's when that took me back to quants. I said, there's no free lunch. Banta to wahi hai 15-20% at the end of the year. So might as well figure out a method which you are comfortable with so as to get to that 15 or 20% at the end of the year.
Yeah, so folks, please remember that, okay, when we're talking about trading, it's really important for you to understand the difference between
and
trading.
Control your risks.
Control, that's what, and
Yeah.
a lot of people who enter into trading then generally become investors because when you can't figure it out, you just say like, I'll just hold this. Okay, last question before we go into the break, guys. Nerds, quant, engineering, these are the 3 words I kind of figured from your website. Folks, the website, Investmint, that's investmint.club, is a website which is under development. I'm sure it will get developed as you launch the product. Check out the website. How are you guys different? Because everyone, from the guy who's in an IIT, who's cracking everything and, developing the no loss max upside kind of thing. How are you guys different?
Sure. No, absolutely. So I think, and that's a bang on point. What has happened in the last 2 to 3 years, perhaps in the last 4 years, is that the stock markets have seen an influx of some really savvy and sophisticated investors, which had never been the case. And that led to supply side also, honoring that demand, which was tools like Trendline, Ticker Tape, Tijori, offer insightful, beautiful ways of you to screen market through various technical fundamental parameters, create your own, ways of investing. While on the other hand, the story I started with personally is also a story true for a lot of, new entrants to markets, which is you start watching television, you start hearing tips from, that casual party conversation, and you end up with, a basket of stocks you have no idea about what to do with. So, and on the other hand, you have those 5% successful traders, right, who actually make money. So I think it's just about bridging this gap, that exists, that these 3 canyons that you need to jump, essentially from having a desire to be a successful, scientific, systematic investor, and that translating into having the mechanism to be able to now continuously do that day in, day out, month on month, week on week, year on year, without that emotional baggage of short-term impacts on your capital, right? While on the other hand, there is a huge barrier to be, crossed for people who don't even know that there are systematic and proper ways of knowing exactly what's going to happen with your money as you participate in this journey, right? Which is well known by the systematic investor. So I think there's a huge barrier or a huge grip, bridge that can be essentially created that makes people just kind of better investors. So while yes, to answer your question, perceived perception might be everybody's very sophisticated, but they don't really participate in that mechanism today.
Yeah. Sandeep, what's your view of these YouTube kind of people who guarantee you money and that kind of
Well,
stuff?
obviously, there are no guarantees, but, one of the issue is each of these, the problem with the financial ecosystem, especially in trading, is the incentives are not aligned. So each entity is trying to do something which may not be in the best interest of the investor. And that's also the reason I think SEBI is very, very particular. Every 6 months, it comes up with one thing or the other, which is absolutely important. And that is where I think professional tools and, communities are very important to educate people about what's possible, what are the boundaries, and not believe in all these stories about doubling your money and all that. So, that's how I look at it.
Posting screenshots, huh?
Oh, yeah.
What is that about? Why, guys? What is
there is-
Why,
See, there are-
why
there-
people posting screenshots?
Yeah, so I think there are always people who are a little ahead of the curve from the rest of the Janta. And what they end up doing is maximizing the situation in their advantage, right? So they end up luring people into, their paid Telegram groups, YouTube groups, whatnot. And that's a great mechanism, right? Like people fall for these. It's exactly like people like me who had nothing to do with markets or just entering markets.
True.
And falling prey and getting lured in.
And the thing with social media, I think, is it's like a pyramid. So there are a few people perhaps having this conversation on Twitter or any of those platforms, and there are millions of others who are just watching and observing. They are taking decisions by themselves. They're not asking anyone. And I think these screenshot people are targeting that large community, which is like an iceberg, which is right underneath. And, they get lured.
Folks, please be careful of the advice you follow. And at Paisa Vaisa, we're really clear about one thing, that we are helping you to take smarter decisions with your money. I have never had a problem with trading because I believe that that's, completely and totally legit way of putting money into the markets. And I've never taken a stand anti or pro trading. It is there. You want to do it, you do it, but please be careful, guys. That's the reason why we have episodes like this to tell you about trading from people who are actually building a product. And we're taking a break right now. On the other side, we'll actually be telling you what the product is, how it works, and everything else on this episode of Paisa Vaisa. And welcome back. Okay, guys, help me through. What is your target audience and how much time do you think an average user spends on the market? Are you guys looking for, there is this very popular series, I think it comes on Hindi channels called Saas Bahu or Sensex. Is it for
Never knew about
Japan
that.
actually had a very big culture. I don't know whether it's still there, about stock trading among the people. So trading among common folks is very common throughout the world in developed markets. In India, it's still probably a little bit new, and you've got Saas Bahu and Sensex. Not that I'm
Recommending the show.
Not that I have a point of view on that. What works. What is your target audience? And like I said, how much time do you think the average user spends on the market?
Right. So we are building a product for people who are not absolute nobodies in market, right? They probably hold a demat account. They have placed a couple of orders, perhaps. They have taken these stock tips from somebody. They know what a trading activity looks like. And that being said, these are people who are smart enough, savvy enough. They probably use these tools I was mentioning earlier. And they are just looking for a better way to continuously participate in markets, right? Now, the reasons could be from being able to generate long-term wealth by participating in equity-based models, to be able to deploy their existing investments and protect them from worst market circumstances, right? Like a complete market total crash, or just being able to generate passive income from markets by being very active in markets, right? Like short-term, daily, overnight, weekly models, whatnot, right? So I think our target audience is people who range between active traders or active investors to people who are busy professionals, busy with their day jobs, don't have time for markets, but definitely want to give their money a chance to succeed in markets, right? Because they have heard and they know that equity investing is the way to go, but yet are probably afraid and mutual funds haven't really taken a step, right? So what do I do next is one answer that investment answers.
Sandeep, any active trader knows that he has to be glued on 9 to 3:30. There is, pretty much if you're there in that, if you're in the system, then prices move minute to minute.
Got it.
Ticks happen. And if you've got a system, you've got to be there hands-on. Akash has mentioned about how this could also be for people who have day jobs.
Got it.
Do you think that can work in the sense that someone who has a pretty, intense day job also runs a trading strategy on your app, let's say? How do you think that's going to work?
Perfect. So when we look at trading strategies, there are strategies with different requirements in terms of activity. So there are, models which would require maybe every day intervention, or as you said, you may have to observe them during the day. And then there are models which you don't require an intraday kind of intervention. So you come in on a Monday, maybe hold something for a week, what is also known as swing trading. So that's one model. And if you don't want to do even that, and you just want to come in once a month and kind of churn your portfolio or, add or remove some stocks, that's also possible. So it depends upon your, preference in terms of how active you would want to be. So there's something for everyone. That's how I look at it.
Also, to add to what Sandeep said, these are concepts that probably got very famous during the COVID time, right? Like momentum investing, sectoral investing into upcoming sectors. Now, how do I, as an investor, know exactly which sector is about to perform, right? Now, data speaks truth, right? If there are early signs, probably a model can catch that trend before you see it in news and take a reactive decision, right? So what models helps you really do is, instead of predicting what your next action should be, it just keeps you engaged continuously in a systematic method, right? And therefore, you might be a user who says that, hey, you know what, I don't have time to invest, but I would love to be participating and be aware of what exactly is happening in markets, right? And therefore, I participate in probably a model called Sector Superstars, right? Which gives me 10 to 20 top stocks of top performing sectors, right? And helps me be continuously engaged in them. So, my use cases of participation can be various, but to answer your question, it does not really require day-to-day monitoring of what exactly happening.
Okay, walk me through the app. Let's talk specifically about how the app works, onboarding. Let's take maybe, you mentioned one strategy about super sector. Let's talk maybe about one or two more strategies about how it works, what the user experience is for me. And then I'll probably get into the cost part and how that model works. Go on, please.
So, I'll do some context setting to like how investment is structured, right? And if you think about investing product, there has to be a demand and there has to be a supply, right? And on the supply side of strategies or models, while there are good enough platforms that have solved for distributing an advisory easily to a retail investor, right, by creating baskets and distributing them. However, there are tools that are ad hoc in nature that are available to an RA or a RIA to do their research, but that does not really give them the confidence to be able to offer structured investing products to their clients. Let's put it that way, right? So we have built one product for our RAs, where what we do is we give them access to years worth of historical data and give them the tooling to play around with various technical indicators, fundamental indicators, come up with hypotheses, come up with ideas, and just be able to see how this idea performed through various market cycles, right? Thereby getting conviction to create something we call as models, right? Now, these models are, again, like once RA is satisfied what they want to do, they publish this at investment, right? Now, how does this translate to the user side of the story is that users sign up on a very quick, 2-minute job of giving their phone number, email, they're inside the app. They see these models split across the frequency of participation. So you see you have to be either an active investor, active trader, or you want to be a passive investor, or do you want to hedge your portfolio, participate in futures and options based methods, right? And you kind of figure out for yourself, right, without being guided or lured into any of these things as to what it is that suits your investor persona. Who are you as an individual and what it is that you really want from markets, right? Once you have that answer figured out for yourself, all it takes is getting conviction by paper trading.
Do you help me out there? I'm sorry for interrupting, but do you help me figure my risk return profile? Like I said earlier, that I might come in as a trader, but then I lose all my money, and then I'll figure that I might as well hold on to my position and become an investor. So I'm asking is, do you help me clarify my own goals for me, or should I know that before joining in your app?
Right. So you would kind of be given all the data and the mechanisms of participation to decide for yourself whether this is for you or not. Right. And as you are participating, you don't really need to have a demat account or real funds to begin, right? And therefore, given this might seem like a new way of doing things to a lot of investors, we are completely okay to accept the fact.
How does that work? So you're giving me a backtesting kind of a simulation, is it? You're saying that I don't need a demat account and I don't need actual money.
So essentially what happens is you receive signals as your input and you participate with them with those signals, and those positions get tracked inside the app like real trading app. So you genuinely participate in signals as if you would be punching orders with your broker, but you don't really do that, right? So the only step you skip is deploying real money, but you get access to the power of model now, right? You start understanding what is happening behind the scenes. I gain my conviction from there, and once I'm convinced that yes, this is for me, I move to really placing orders with the broker, right? And I start participating in the model more actively. So that's how the app is laid out. It's a very simple to use product meant for pretty much anybody in the markets, right? Who knows a little bit about it and is ready to invest systematically, right? Like give their money a chance to move systematically, one day at a time, 1 month at a time, going forward.
Okay, so let me take this example. So if you were to, simplify, if someone is coming in today to the app, they download the app, and all that they need to do is there's a minor login formality. You do that, and once you log in, you see around 8 models. And what models means? Models are a set of rules which are applied to stocks or securities. So let's assume there's a model called Sector Superstars. What that means is the model is trying to identify the best possible sectors and pick up stocks from them and offer it to you. So you go and select that, and whatever is the cadence of that particular model, so let's say if it's a monthly cadence, the beginning of the month you would get a notification that, hey, these are the X number of stocks that you need to buy, and that's all you need to know. Now you have 2 choices. You say, I don't want to deploy my money, so I'll go with paper trading. Or you could, might as well choose to deploy your real money, so you could do that too. So there's a broker integration flow which comes in, so you could participate through brokers. And once you do that, then you come in next month. That's pretty much.
Okay, let's say I'm a death cross, golden cross kind of a person, who does
I know.
DMA
Yes.
kind of stuff. And
Got it.
I don't have the tools and the the quants and data to help me.
Yeah.
All I know is that when the 200 DMA does a 50 DMA, the 50 DMA does a 200 DMA,
Got it.
boom, I've got to just place my. You help me there?
Well, depends on who you are. Okay. So if you are a retail trader and you want a system around that, well, there's nothing which would help you there. But if you're a RA and you think you have an idea or a hypothesis around it, then, you could use the tools that we have created for you, test them out, and if they work, you could offer that to the
I
users.
want to talk about that because we mentioned RA quite a few times. Maybe our listeners don't know that.
Sure.
And RA actually means a SEBI registered research analyst, which could be typically people, who have their own advisory service.
Correct.
Some of them even go on business channels. Some of them have YouTube, but at least these people are SEBI registered by the way. Okay. So they're not, individuals giving random gyan.
Correct.
Talk to us about that. So what is an RA? What do they do? How does the product help them? Maybe there's someone listening in now for whom this product actually makes a difference.
You want to take that?
Yeah. So RA is a SEBI registered research analyst. What it means is they have the license to create research reports, technically speaking, about a stock or any other security. And the way regulations work in India is, so you have something called RA and RIA. So RAs are the ones who could recommend stocks. And if you look at the ecosystem today, so there are many RAs who are available. There's some of them who would want to create what is known as structured and systematic, models or portfolios and offer it to clients. But to do that, there's a lot of effort which is required. Coming in from the quant background, I can tell you need historical data, you need programming or quant shops. Now, while they have the ideas with them, but to finally create a product which is for the users requires a lot of work. And that's where our tools and our technology chops helps. So we offer that to them, that if they have an idea, then, ideas relatively easy. So you could, Google an idea which is working well in the US. There are academic papers through which you could get ideas. So you get those ideas, but to convert that idea and make it relevant for the Indian markets by using data, making sure it's statistically and mathematically accurate, that's a lot of work. And that's where we help, RAs with.
Okay. I want to just get from a regulatory perspective, what are you guys, right? Because there are RIAs, there are RAs, there are brokerages, there are fund managers. That regulatory landscape is pretty wise. But for our listeners, I'm always very clear that, it's like the khosla ka khosla thing. Aap party hai ya broker. I just want to figure that, are you guys just a technology layer or what exactly that? What are you guys?
Yeah. So we are a technology platform that essentially houses these models that are created and managed by these RAs. Now it's a closed gated platform right now in the sense that we are very early in the journey of building this product. And therefore there are, a few select RAs that we work with who are systematic investors themselves, who develop these quant based models and want to offer them to the world, right? So So in that sense, yes, we're a platform which connects the two pieces of the puzzle, give the tools that RAs need to be able to create structured products, and then, enable them to distribute that to end customers.
Yeah.
So, yeah.
So and what is your business model out here? Because let's say that I'm actually someone who pays. I don't know whether you've got a paid model going or will have at some point in time. But I'm just paranoid about this whole, mera paisa lekar bhag gaya kind of stuff.
Right.
We've had that some very unfortunate incidents in the real life broking space where brokerages have taken power of attorneys and done all kinds of rubbish with that. I just want to get that off the plate.
Right.
What is your business model?
Absolutely.
How does that work? And
Absolutely. So
my next question will help you understand that better.
Absolutely. So we are not a fund manager. We do not accept money for management. That being said, people hold funds in their own broker accounts, and their money is as safe as whatever they do with their own broker account. So if you trust your broker, you can trust Investmint. So we are a layer above the broking industry. We are not a broker ourselves. We don't intend to be one. The objective will be to keep the slate very clean and not say that we have any incentives aligned with the broker. Our incentives are completely aligned with the RAs and with the users, right? So therefore, we don't get into any partnerships with brokers. It's just a pure play API integration that facilitates that transaction layer. And for the users, yes, it will come at a cost. Of course, the platform is in a very early access mode right now. And therefore, we would love to test the waters first with our early users before we say, we would like to monetize the platform, so to say. So in the early days for us, we would like to learn and iterate with the users.
Yeah, and this is what I was coming to. Okay, this is one of my favorite questions, and I love to ask it from people who are actually going out there and building products. Because you guys are probably among the smartest out there. If someone comes to you and says, I got this broker who told me that he'll give me guaranteed 2% a month. I got this broker who offers me this, or analyst or advisor or someone who offers me X for X. What is your answer to them that they should check if they create a checklist? Okay, I'll ask you for a checklist.
Sure.
Before entering into what looks like something that's, I don't know whether it's black, I don't know whether it's white, whether it's grey. I've had a lot of questions in the last 2 or 3 years. People who are very busy, who've got maybe a small corpus, they don't want to understand the market, but they want to trust someone who says he or she can understand the market. What would be your checklist to someone who wants to take such a service? What should he look out for?
Perfect. So one is the first checklist would be, who are they regulatorily speaking? So are they RIAs? Are they brokers? What are they? So there are only certain regulated entities who are allowed to manage your money, and PMSs, AIFs are the ones who can do that. All other entities cannot manage your money, so run away. If at all they don't belong, they are not a PMS or an AIF, or an individual is coming to you, run away. So that is one. And the general thumb rule, I would say it has been true, it is still true. If someone is promising you something which looks too good to be true, it probably isn't kosher. So that's the advice which still remains. So check for the regulatory license and don't believe any returns. If at all there would be risk. If the returns are more than what you would get in an FD, then the odds are you're taking risk, and be sure what is the risk you're taking. In fact, recently I came across someone who got lured into something like that, but they were smart enough to go to SEBI, raise an issue, and they got all their money back because it was someone from the broker side who was trying to. So there was this lady, what she did was she gave all her credentials off to someone at the broker end, and the broker took crazy positions and lost all her money. It was quite a bit. I mean, for an individual investor, even a couple of lakhs could be a lot of money. So, but thankfully they got it back because they raised the issue to the regulator and they got the money back. So you have to be super careful.
That's a rampant business, by the way. I mean, there are plenty of people who are taking credentials.
If I take his thing and I say, okay, I am going to a broker. The broker showed me his license. The broker did all of that. But being someone who's regulatory controlled.
So this is all ties back to those people who are posting screenshots and then them trying to run these, let's say, option strategies. And you as an investor say, hey, you know what, I have 10 lakh rupees. Probably I can do like 5 lots of Nifty. Can I get started? How do I get started? Okay, this person seems to be doing really well on Twitter. So let me probably reach out to them.
That's what I'm talking about.
See if they have time to manage your money. They ask for your credentials, you give it off to them. They have tools developed now to manage probably 100 accounts in one go. So it's a lot of stuff happening.
Yeah, folks, check the regulatory position of whoever you're dealing with. Check the licenses, ask for it. No jamtara out here, okay? I saw season 2. I thought season 2 was really good. They've taken scams to another level.
True.
Altogether.
True,
so please, no jamtaras out here. No guaranteed money to chhod do. Market mein, you guys are not offering guaranteed money out here.
No, we're not promising anything.
Not at all.
Anyone who offers guaranteed return and then takes your OTP, guys, honestly, please, don't fall for all that kind of rubbish. check each and every detail of any scheme, trading, investment, bank account, whatever. There are a lot of people out there who would hand over fist take all your money away from you after taking your permission. So please be careful about that. Sandeep here gave a few really good tips. Check the costs. Okay, what kind of costs are involved out here? Who are the people doing it? What is the regulatory position? So please check all of that. The stock market is not a free lunch game. It can take all your money, all your clothes, and a lot away, provided you please just be careful with what you're doing, guys. Wrapping up the episode, what are the costs involved out here? I mean, what kind of revenue model are you building? How do you see this going ahead?
Yes, essentially, we want to keep things simple and say that given investment will offer a lot of things which are non-correlated. We want to offer people a mechanism to participate in short-term investing to long-term investing, to be able to hedge their portfolios and whatnot, which means that we want people to do a lot of things and not necessarily pay for each of them separately. And therefore, a lot of it might be just a bundled plans. Again, a lot of TBD stuff, so can't really comment on that.
Sure.
As of now, the direct costs for a consumer will be them paying brokerage, them paying transaction fees to the exchange, to securities transaction tax and whatnot. So whatever expenses are with respect to your regular trading applies, while you will not pay investment anything right now, right away. So yeah, I mean, that's where we stand.
Do you eventually plan to get plugged into a brokerage app? Like if I say I download Investmint, you give me a strategy, whatever, super sectors or whatever, the execution will get taken care of for someone like a Zerodha or an
Yeah, so we're not into algo trading. We don't want to really do that. You do not place an order.
Asking how does the execution happen if I want to pay up and actually do a trade? How does that work?
So it's as simple as receiving a push notification on your app. Once you're subscribed to a model, you say that, yes, send me signals. You start receiving signals. And when the signal comes, you enter what amount of capital do you want to play with, you want to invest, and hit a button and the order goes through with your broker. So
the order goes through with the broker will work how? I mean, do I need to also have a brokerage app on my mobile phone?
Not really. So these are like products like Small Case Gateway, which have built a gateway product over existing brokers.
Okay.
So either we could be directly partnered with brokers. And
that's what I'm asking.
Yes.
So you do plan to do that eventually?
Absolutely.
So that the experience becomes smooth for me.
Absolutely. It's already smooth. It will become even better going
future plans. I mean, assuming you guys would probably be starting with equities, cash, derivatives, stuff like that. What do you have in mind going forward next couple of years?
Well, you said it. Multi-asset is something which we are looking at. If you look at the kind of products which are there today, a lot of investing professionals and professionals in the ecosystem are talking about alternative investments. When alternative investment is spoken about, it could be crypto, it could be things like pre-IPO stocks and whatnot. So, but one of the things which we feel has, retail has not exposed itself much is existing categories like currencies and commodities and so on. So there's a lot that can be explored in a systematic way, so long as you de-risk yourself, so long as you do it in a proper structured way. So I think opportunities are right there, and that's something which you would want to explore.
Yeah,
absolutely.
You said currency. There's a lot of commodity. There's a lot of fixed income. What about that? You think you've got capabilities?
Of course. Yeah? So as we progress, we would.
What I liked is that when you said crypto and pre-IPO, you kind of went the other way and said currency and all, because I don't know, personal bias. Okay, and I'm not, because I've had a lot of people from crypto on Paisa Vaisa. I've had a couple of shows on pre-IPO. I have no problem with them as an asset, provided that again, investors know what they're doing, but they are unregulated,
absolutely,
and B, illiquid. And my red flags go up. Those two words in a combination,
absolutely.
You can have either or, but if it's and, then I'm like, you need to have a level of sophistication.
Got it.
Someone who knows the stuff can do it. So that's what I just want to get it clear from you guys, that you're looking at currency, probably, I don't know,
anything
debt,
which is listed, liquid, on an exchange.
On the exchange.
So
golden words, listed, liquid, on the exchange.
Yes.
All the best, guys. I think by the time the episode goes, your app will be out there.
Absolutely.
Right? So I wish you all the best. Please come back, once you've got millions of users or your VCs are very happy with you. Even if they're not happy with you, you're always do come back to Paisa Vaisa. But folks, that is a wrap on this episode of Paisa Vaisa. My guests who've come all the way from Bangalore. Thank you, guys.
Thank you so much.
You're going to take the blade. I mean, you guys will actually considering the blade from going from the airport to wherever you are. We spoke about that pre the recording, guys. There's a helicopter. I mean, for those of you who've heard of blade, these people are from Bangalore. They know what traffic jam is about. They're taking the 10 o'clock flight out tonight. Do you think you'll try it?
From Bombay?
No. In Bangalore.
Yeah, I mean, if Sandeep is ready to give it a try.
I think, why not? So long as Aakash is footing the bill, I'm happy.
3,500, right?
3,500.
Not exactly cheap. Who knows? Maybe I'll get IBM to sponsor one and do a recording in Bangalore. But folks, there you go. That is the wrap on this episode of Paisa Vaisa. Like I said, my guests Aakash Goyal and Sandeep Rao. The app is Investmint, investmint.club. That is the website and the app. When is it going to be out?
So we'll be live by mid-October. Yeah.
And you can check out the app
On both iOS and Android.
Android soon. And like I said, thank you guys for doing this episode of Paisa
Pleasure.
Vaisa.
Thank you so much for having us.
Sure, listeners learned a lot. And listeners, thank you for listening to this episode of Paisa Vaisa. Don't forget to subscribe to our YouTube channel. Bhai log, please thoda support karo yaar. We need some really big, nice number for our YouTube channel. We're new out there, where you get all our video episodes. You can check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. And if you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter. Folks, thank you. Really, thank you so much for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.